2016 provided several great examples of why we preach against following the news and trying to move money around in portfolios based on what's put forth by the media. Despite the dramas, it was a good year to be an investor. The year started with a falling stock market. The financial press was full of stories pointing out how it hadn't been that bad since 2008, implying that markets in 2016 would be just as bad. But it didn't happen. Later, the British people were supposed to vote to stay in the European Union. Didn't happen. The surprise result jolted the markets briefly. The consensus at the time was that this was going to be awful for markets in the year, but it didn't happen. Hillary Clinton was supposed to be the first female president of the United States. Didn't happen. Before the election, many commenters claimed that if Trump won, the reaction would be so negative, we could have a massive market crash. Again, didn't happen. Now, it isn't that pundits are always wrong or that bad economic and market events never happen. Bad things definitely do happen. It's just that predicted disasters consistently get better ratings, even though most of the time they don't actually happen. The early year drop, Brexit, and the election are 3 times during the year that you could have been scared out of the markets. Now, if you're a news-following trader, you had a rough time of it. Even if you predicted the market-moving news ahead of time, the window to get out before the markets drop, or in before they were down, or when they were down, that window was very small. If you were betting on a post-election financial drop, in fact, there was no window at all. The Dow opened flat and it finished up 257 points the day after the election and basically kept going through year end. True long-term diversified investors ignored all this. They didn't make bets on the mood of the market, the election results, or the reactions to the results. Investors incurred fewer costs and paid less in taxes than a news-following trader would. Investing can be very difficult. It requires perspective, discipline, and patience. But trading's harder. Invest, don't speculate. Now, we have more on these events and a look at what to expect in personal finance during 2017 in our quarterly newsletter, which is posted on the blog page of our website titled Looking Back at 2016 and Forward to 2017. As always, if you have any questions, please contact us. We would love to hear from you.